All right. It is Tuesday, April 18th. Hope everyone had a good day today. This was a first day in a little bit of time where I actually did not take a single trade today. I want to go over my bias going into the day, sort of what I was looking for, what trades I might have taken, and why I just didn't take a trade today. So, first thing I want to look at is going into the day, I did have a little bit of a long bias, even though we swept liquidity, right? So that is what is the biggest thing I want to focus on from this session is even though that you might have some sort of bias, you need to take into account what the market is actually showing you, right? So going into today, pre-market, we had a push above and we had a push. We had we had this push from the lows, never took out this sell side down here, but we did hit retracement of 50%. We bounced up, retraced into a weekly opening gap, and then had a nice push in the afternoon session to take out liquidity from this buy side. And then we also took out one of these previous highs from over here, but never took out that big buy side level that we're watching for. So my buys for the day is I wanted to see sort of a large push, like a continuation. Again, we had this big push. I kind of wanted to see us burst into the open and then take out this level and then potentially look for a sell off. But I never ended up getting that. But we took internal, technically external liquidity. I mean, and then we had that market structure shift and sell off in the day. So going into a smaller time frame, we did actually get our model. And the reason I didn't trade this model is because of the price action and because of NQ at the time. ES and NQ were not correlated with each other whatsoever today. ES looked very strong. NQ started to look weak. I wasn't confident in getting into a position when ES and NQ aren't showing. They're not correlating with each other when they're showing differences. It makes me skeptical about which one is going to push the other one first. And as we can see here, ES ended up pushing NQ with it because the bearish model started to play out. So first thing on a 5-minute time frame, we have external swept here and external swept here. Both of these highs are now swept. We put in equal lows here. This would be now our market structure shift. We have that one last push. This is our manipulation move, right? So if we're talking about I just forgot what it's called. See, oh my God, that is actually crazy. I didn't even notice that. We hit four literally to the tick. That's wild. But we'll go over that later. So we have internal swept. We have that big push down, and then this would be our market structure shift. So looking at a 1 minute, or maybe even a 2 minute, whatever you really want to look at, we have a fair value gap now here created, right? So we have break of structure, we have liquidity swept, we have good displacement, right? We get a nice clean break of this, and then we pull back into this 1 minute fair value gap. At the time, though, looking at this action, it's starting to look very slow to me. Let me pull up NQ here too, because I want to talk about exactly at this time. At the time, for me at least, I think NQ is bullish. And the reason I think NQ is bullish is because looking at a 1 hour time frame, we get above this big resistance level we've been having. We have a breaker block here on a 15-minute time frame. We're pulling back into this. We have these fair value gaps. Now, on a bigger time frame, like a 1 hour, we have not yet swept the buy side liquidity, but we are forming SMT, which I did draw in. ES did take that low out. So this was technically SMT divergence, but I still wanted to see NQ take that high out, but we did have SMT divergence, which showed that we might have would see a sell off today. So at the time, looking back at a 1 minute, actually, I want to start on a 5 minute on NQ. I wanted to see a retrace back down into this fair value gap and sort of form a turtle soup kind of entry. I wanted to see ES or NQ break this low created, and then I wanted to see the other one hold it. So I wanted to see some sort of SMT divergence here, sweep liquidity one more time from this low, and then bounce to potentially take out this buy side liquidity on NQ. But again, on a bigger time frame like ES, we've swept that high already. So ES has now swept liquidity, forming a bearish model, getting ready to sell off. So looking now at a 1 minute, I draw in my internal buy side, which is this high. I'm looking to get taken out. We never did take it out. We actually form equal highs with this high over here. So this is going to be something that we might revisit and can hunt. So going into this on a 1 minute, we have both ES and NQ sweeping this low. So there's no SMT yet. We start to bounce, start pulling back into this fair value gap. At the time, ES breaks this high out and now starting to have this strong push up, right? So this, if I was to enter short here, right? If I was to enter short here, let's just say like it just somewhere here, my stop would be at the top of this wick. And I would have most likely I would have gotten stopped out if I was in this trade. So how could I have potentially caught this model without maybe repositioning myself? So looking at different time frames, we have a 5-minute fair value gap, or we don't have a 5-minute. We have a 3-minute fair value gap. We have this kind of 3-minute order block here. But again, the way I trade, I like to put my stop at the wick. And when I get this kind of price action, I know that I'm most likely to get stopped because of how choppy it is, right? That's why I don't trade it, because I know I'm most likely to get stopped because of the chop. I want to see clean movements. I want to see clean move down, clean move back up, and instantly reject off this fair value gap and then automatically head back lower. But when I'm seeing NQ chop, NQ stuck in the range, ES is still stuck in this range, it makes me not want to get into a play, because now if I was to technically take this trade, and honestly, for this trade to be technically invalidated, it would have to take out this high. But it is not worth me putting my stop way up here when that's not how I trade. If I was to take a short entry right here in this fair value gap, and I set my stop at this high, my 1-to-1 risk to reward has to be here. And that's a pretty big sell-off already, right? It's not worth it. That's a 1-to-1 risk to reward. So I can't do that. While we're selling off, I need to set my stop tighter, right? This is actually worth it to me. Again, even though it's a good setup, if I'm not following good risk reward, I'm not following good risk management, then there's no point in me taking that trade. So now one setup I could have seen, if we came up back, rejected this, had that big push down, and then, right, we have this fair value gap here, this would have been a nice possible short entry. I would have liked this much better, because we get now double confirmation. I get a pullback into a fair value gap. But since we're chopping, I then wait for confirmation of the rejection, which means I want to see now internal break of structure. So we come up, take this high out, sweep it, look for a break of structure. We get this here, and then we get a pullback to this fair value gap. That would have been a better entry for me to take, but we never retrace back into this. So the reason I don't want to trade like that is because it skews my risk reward. If I was to take that loss, it would just not be worth it. So I'm not going to take a trade unless all of the criteria meets, because that way I can risk less and get bigger return if once I catch actually good action in a good trade. But if I was to set my stop way up here, I'd have to get a way big move, which most of the time you're not going to catch this big of a move, right? This does not happen every day. And the reason why some SMC traders or smart money concept traders have been struggling this last week and this last 2 weeks, and why trend traders have been doing well, is because of the moves that we've been seeing in the last couple of weeks. Again, we have the straight move down, straight move up, straight move down, straight move up, straight move down, straight move up, straight move up, straight move down. There's not really been any really trades in continuation wise, because it's just sort of been trend days after trend days. So as traders, we recognize these conditions and have to sit here and say, okay, this does not fit my strategy. Now, the worst thing you can do, it's not really a bad thing, but because adapting to the market is good, but we know what works for us, and we know we have a strategy and we have an edge. So there's really no reason for me to change that strategy because the market is going through some sort of, seasonal change, right? Now, if this continues to happen for months to come, then I look to somehow change my strategy. But this has only been happening for, it's been a week, 2 weeks where we've been having some shitty action like this, and it'll most likely pass like it always does, right? And then when the action does occur where we actually get those good setups that we need, we execute, right? When, like we were talking before, you have to know when to play defense and when to play offense. Right now, it's more defense. That's how we stay alive, because trading is a longevity game. It doesn't matter what happens today. Doesn't matter what happens tomorrow. Doesn't matter what happens this week. Doesn't matter what happens this month. What happens is staying alive to get to the end of the year where you actually have a P&L to look at, right? Because most of the time, there is not a lot of traders that can get to the end of the year and trade a whole year and still be like, yeah, here's my account. This is the growth. By then, everybody's blown up, right? A lot of traders do not have that consistency because they are not thinking of trading as a longevity game. They're here to gamble. We're not here to do that. You have to recognize market conditions and recognize when to play defense, when to play offense. So going into today, there was no setup I was confident in just because of the price action. Same like yesterday, did not have good action, did not like the trades, ended up taking a loss yesterday. And now today, recognized those action and did not take a trade, did not want to risk taking a loss on that. So I do want to look at the rest of the price action going into the rest of the day today. The only setup that I did see that I kind of liked, there was this short setup that I liked. I was talking about potentially taking this. I did watch this live. I did say that this would be a nice one, but again, I didn't really want to risk it, but it would have been a nice short. We have consolidation starting to pull back. Notice how volume starts to die down. This is the biggest thing. Look down here. Notice how when we're retracing this fair value gap, it's not like a straight move back up, right? There's not a lot of buyers that want to push this back up. It's just slow chop, consolidating, starting to move up. We're forming a nice little trend here. This is a perfect little bear flag, if you want to call it, holding this fair value gap. This would have been a beautiful short. You could have, entered short here, put your stop above the previous wick, and then ride it to weekly opening gap or sell side liquidity, whatever it is. This would have been a nice trade just because of the risk reward. Like, this is a beautiful trade to take. Even if you took it on, at this low, that's still a 3.67 risk reward. That would have been a beautiful trade. Even though it's not our setup, we're using PD arrays and understanding what the draw on liquidity is, right? If we're looking at a 15-minute, right when we got the initial sell-off and the break of structure up here, right up here, I told you the next draw on liquidity is going to be this low, right? The next draw on liquidity, understanding what that means. So knowing what the next draw on liquidity is, we can somehow look to find a trade to target the draw on liquidity. And that was an example right here, being able to find that trade. And once we saw that we keep rejecting, that would have been a nice short entry targeting sell side liquidity down here. That was the only really good setup. Now, the rest of the day, continue to chop. This was another setup that I was potentially looking at. We had equal highs formed here. We came down, swept liquidity, instant bounce back up. Now, we do not have a clean market structure shift, but sometimes we don't need a market structure shift, especially when we've taken external liquidity. We're bouncing on a bigger time frame fair value gap. We have a sweep of liquidity and then an instant massive pushback in the range, right? So what I would look for is I wouldn't necessarily enter off this fair value gap. I would enter off this fair value gap. And the reason is because I'd look for some sort of market structure shift first. So we get a push up, continue to, again, this is action that wouldn't even make me want to trade this, but continue action, continue to hold this fair value gap once we come up. Now I would want to see a break of this high, which we do. Big candle. This candle right here tells me that I should get in. And the reason is because we get, an actual fair value gap, a big fair value gap that we want to see. Once we get that candle, this would be your entry. Pull back into fair value gap. I'd put my first price target would be the equal highs. My stop would be the low. Again, not the best risk reward, 101 for your first PT. And then my second price target would be equal highs that were created up here. You can see we just continue to chop. Stop would be break even. Never ended up hitting your break evens, and then we would have hit that. Actually, we formed equal lows on here. Maybe if there's a short setup, we'll see. And then you ended up hitting that equal high. So this would have been another possible trade. But again, I wouldn't might have taken it with small size, but I just don't like the action, right? Especially when we're just chopping in this range. We come up, look like we're going to break higher, and then we just sell off, and then we come up, and then we sell off. So it's just not worth it for me. But another trade possibly could have been, I want to see how this played out. Come up, form equal lows here, and then we come out and take buy side liquidity. Maybe see if there was a potential play, market structure shift. No really pullback to this fair value gap. I wouldn't take this fair value gap. And the reason I wouldn't take this fair value gap is because we've already hit this, like we've retraced too much. I'd want to see us hit it from like here. Once that hits, again, still wouldn't really take anything. Come up to take liquidity one more time. Market structure shift here. Again, first fair value gap created. This could have been a possible short entry. I want to see if there was an SMT here at the time. There might have been. There was. So this would have been a better trade because you get SMT here as well. You get ES sweeping liquidity. And you get NQ forming SMT. NQ forming that lower high, ES breaking above to form higher high. Then you get that sell-off, market structure shift. and you get the first fair value gap, pull back into that, and then sell off targeting equal lows. So that would have been a nice possible short too. Stop above the high, price target that equal lows. Again, 6 risk reward. These are the trades that you want to be taking, right? Because a lot of traders that trade SMC, you'll trade. I mean, 1-to-1 is not bad, but 1-to-1 should be your 25% off or 50% off position, right? That should not be your whole position, because by the time you take, 2 losses in a row, you've already wiped out your gains. So when we're taking trades like this, where we're risking very little and making a lot, especially when we have such a system as we do, which has such a criteria where we can get plays like this, we have to take advantage of that and have to have the discipline to only follow that, right? If we can have the discipline to only follow those strict rules and strict, risk management, then the times where the market actually rewards you, you're going to get rewarded for it, right? You're going to get rewarded for being patient, disciplined. Just trust me. Now, it's just been hard because we're having to dealing with, bad action recently. And then the rest of the day, there was really nothing else. So looking at the 1 hour, going into tomorrow, I want to mark in my areas of liquidity. Take all this stuff down here. Now, I am bearish going into tomorrow. And the reason I'm bearish going into tomorrow is because I think the next draw on liquidity, at least I want to see us come down to this fair value gap and take out this low is what I want to see. We have this high here created, internal sell side. Looking at a 1 hour, again, we have that liquidity swept. We have a big push down, market structure shift on a bigger time frame, pulling back into this fair value gap, continuing to hold and reject this. I now want to see a push back down to internal sell side and potentially to this fair value gap and potentially to take out sell side liquidity. That is what I'm looking at going into tomorrow. I am bearish going into tomorrow. Since we've taken this low out, we had that big push down. I want to see a push now to take out sell side at least. I think we'll take out sell side at least. And then after that, hopefully to this fair value gap and then to take out sell side. On NQ, now it looks like on NQ, we could get more of a bounce again, because NQ, we still have not really taken out that high up here. But since we have taken these highs and we have a big push down, I think the draw on liquidity are going to be these lows here. So again, I'm bearish on both ES and NQ tomorrow. Question answered. So you just look for the draw on liquidity and then a fair value gap entry. Exactly. It has to be more specific. I need to see some sort of, reason for me to enter. And the reason for me to enter most of the time, if I'm taking a trade for the draw on liquidity, it has to be strong volume, like strong sell off to like, that makes me think that we'll continue lower like this. We get that big push down, right? Because normally in the past, we've taken trades where like it's little scalps where we get that, big move down, and then I take a little pullback to fair value gap, and then we get a big move down, right? That continuation. So I need to see lots of volume, and I need to see some sort of rejection like this. Like once we get that pullback here, like I wouldn't just take this first entry here. I would want to see, because I wouldn't be confident first because of the action. But once this starts to form like this and we start getting more action forming, by the time we get here, I'm like, okay, this looks like we're going to continue lower. We're just consolidating, holding this fair value gap. This looks like a beautiful short. Potentially taking that with good risk management, it's worth taking that. I'm honestly fine taking a loss if this doesn't work out. Justin, do imbalances and new weekly opening gap always get met again? Like, yes, not in 5 minutes, but eventually it will. Yes, it will. Are you mainly looking at there's maybe like a couple % chance that it won't, but it most of the time it will. Are you mainly looking at the 1 minute time frame when you are trying to find buy side and sell side? No. I look at bigger time frames when I'm looking for external levels. Like if I'm looking at a 1 hour right now. So let me take all this stuff up. So like our external buy side now would be this high. Internal buy side would be these highs, right? Because we're in this range, right? We're now in this range of external buy side, external sell side. And then we have internal buy side, internal sell side, because we're in this range, right? And then also I can look at a 5 minute and also talk about more internal buy side. Like this could be internal sell side, right? Or if I'm looking at a 1 minute, it can also be internal buy side, internal sell side, whatever it is, right? If these setups play out outside of the market hours, is it best to stay away? You can backtest it. Honestly, you should. I mean, you can try to go for it and take a stab on it for yourself, right? I'm always for backtesting your strategy, especially if you see it aftermarket, and just see how it plays out. But I would recommend, if you are backtesting it and you're not confident trading after hour session or London session or whatever it is, lower your, like, only trade it with a couple of micros, if not just paper trade it and just see how it plays out, right? Oh yeah, how do you know which high or low candle would need to be broken for it to be break of structure? So for example, let's look at today. What would I take, or what would I consider break of structure today? So drawing in, right? External sell side taken. So now I'd look for internal taken and then a break of structure, right? So I need internal taken and then a break of structure. All right. So first thing, nothing yet because there's no internal taken. This is now has to be taken first because this is the low. So we need to see this low being taken first, internal sell side, to look for a long position. So this never gets taken until right here. So now we get a high being taken. So now, since there's no high here, right? Since there's no high here, like let me replay this. We come up, form equal highs. So we have what our model wants so far, right? We have external sell side swept, and we're now looking for internal sell side to be swept. Okay. So we come up, form equal highs. Now looking for internal break of structure, move back down, sell side. Okay, now internal sell side is now swept. So now, since there's no prominent high here, I now want to see a high be formed and broken through with big displacement and a fair value gap, right? So let's see if we get that. So we get a push, we get a fair value gap. Again, I would not take this yet though, because there's no break of structure yet. This could be, you could enter maybe like a quarter of your position and then enter once you see it bigger. But I would not enter full position here. I want to see this starts to hold. So now, okay, we have a high created here. So now I want to see a break of this with big displacement. Okay, we get a break of that, but there's no displacement, right? We go above it and then we go right back in. There's no follow through here. So this would not be break of structure. So now I'd want to see this high be broken through with big displacement. All right. Still nothing. Still nothing. Okay, boom. There we go. So we get a big push and a fair value gap created. So that would be our break of structure, right? Honestly, you could consider this here as well, whatever it is, right? All you're looking for is that displacement candle. Notice that there was never a displacement candle here, right? There's no big fair value gap. Now there's like, you get a little fair value gap right here, but you're not going to trade this because, again, I like to say the market will tell you where to enter. You shouldn't be second guessing it. This is that big candle we're looking for. We want to see a big fair value gap get created. So this would now be your entry. Because here, you never have that break of structure. I wouldn't trade off this fair value gap. You can enter again. You can enter lightly into this position, but you want to see that break of structure first. So you have, again, everything you want now. External swept, internal swept, push up, holding fair value gap, market structure shift, break of structure, whatever it is. It can be here. It can be at this high. It doesn't really matter. Big displacement, fair value gap created. This would now be your long entry when we retrace into this. And your first target would be equal highs. And then we have more equal highs up here, which we know will act as a magnet. So your first price target would be these equal highs. Second price target would be these equal highs. Stop at the previous wick. There you go. First price target, and then stop to break even. And then there you go. So it's just having the patience to wait for it, right? Especially with this action, you don't want to trade this bummy ass action, bro, because you're going to have to sit here with your thumb up your ass for a mediocre setup, right? But you get everything you want. There was no entry before that, right? Because we never got what we wanted. Internal sell side, that never gotten taken out first, right? So there would be no setup here. People are like, oh, well, there's a fair value gap, like maybe somewhere in here, but there's no internal swept, right? We need everything for our model if you want to get a good setup. And then when we actually do get everything, it works out. All right. So going into tomorrow, Again, I do have a bearish bias. Since we did sweep this high, we've had a big sell-off, pulling back into this fair value gap, continuing to hold this on a 1 hour. I do think we will reject and head lower to at least take out this internal sell side level, and then potentially take out this sell side here, which is what I'd honestly like to see this. I want to see us come down and take this level out and potentially back to weekly opening gap, the previous weekly opening gap. That's what I want to see. All right. So everything you showed us for that potential play was on the 1 minute time frame. Could that also be found? Yeah, it could be found on any time frame. It could be found on any time frame. I mean, just like look at this, for example, on a 5 minute here, the exact same setup, exact same model that we look for right here, right? External swept, internal swept, right? We get that push up. Oh, wait, I actually want to check the fib on this on internal swept. And that's a big manipulation move though. Looking on a bigger time frame, this would be the manipulation move. Yeah, I don't think we're seeing that. I mean, we'll see. Says we'll head back to buy side, but I don't think it will. We'll see though. But back on the 5 minute. External swept, internal swept, market structure shift, pull back to fair value gap. Now there's no 5 minute fair value gap, but if you zoom in, there's a fair value gap. Again, with bigger time frames, you'll most likely have to zoom in if there's not one, because there most likely will be one. We never really, I mean, I guess you did get a close above, but we still really held this, and then we sold off afterwards. But again, you can find the model on any time frame. How do you draw the fair value gap if only the wick breaks the previous high low to create market structure, not the body? I think a good example is at 1036 on NQ. Let me check. Yeah, I'm confused on your question, so let me see. 10:36 a.m. on NQ. Okay, you said, how do you draw the fair value gap? Only the wick breaks the previous high low to create market structure, not the body. Are you talking about like this? Like saying only this candle wicked? So you just draw it in like a regular fair value gap. I'm a little confused on the question. Only the wick at 10:30, like for a market structure shift? Is that what you're saying? Like it, like, well, number one, I wouldn't consider this market structure shift because like you could trade this, like go for, like it might work, but again, it's most of the time it might not work because you don't have exactly what we need for a model. But you might work if you want to scalp this. I would consider this to be a decent break though, because this first candle doesn't have to. It doesn't have to be one like single push up. That's what we want. But since this candle pushes up and then the close happens at the high and then we get that candle push up. If you look at a bigger time frame, like a 2 minute, that will be a big candle, right? You have to think about it like that. Like it's, again, you just have to recognize the strength versus weakness. There's no hesitation here, right? We come up and then the next candle opens and we still get that follow up, right? It's more of just the time, right? Because the time, it's a 1 minute candle. It closes after 1 minute. If like that candle was like 5 seconds off, then that would have been, a fuller candle. So again, it doesn't need to have that first candle doesn't have to, fully break it. As long as we get that displacement, follow through, that's what you want to see. Yeah, you're overthinking it. Don't overthink it. You just need displacement. It doesn't have to be, one candle or whatever it is. You just want to see a follow through. Only time you look at 1 minute is to see the action faster, basically react more if you miss better RR. Exactly. 1 minute is for me to exact my entries, get the best RR and the most precision. All right. That's pretty much all I really wanted to cover tonight. Again, not really good action today. Hopefully we can try to see if we get some better stuff tomorrow. Looking at news real quick. I don't think we have anything. Yeah, we don't. Okay. So no news going in tomorrow. So hopefully we can fucking get something because the last 2 days have been a little bit rough. But again, traders, we're here to stay, staying alive. If we don't get what we want, we have to sit here and take it. All right. Enjoy the rest of your night, guys. If anybody has any questions, again, feel free to just at me in the Discord, whatever you want. I'll always get back to you if you just at me in the Discord. So we have to be tactical. Yes, sir. Enjoy the rest of your night, guys. I'll see you tomorrow. Appreciate it. Father Justin. Much love, guys. Peace. Can you post this one? Yeah. It's recorded, so I'll post it. Enjoy the rest of your night, guys. Later.